All right, let's talk about the friction and conflict that's happening right now, because we have markets that are still hovering near all-time highs, but commentary coming out from some economists in certain parts of Wall Street that say that maybe things are slowing down. So how do things play out in your mind?
Well, earnings season's telling us a different story. 83% of the S&P 500 stocks had reported a beaten on earnings. But yes, we're seeing some slowdown. And the thing that got us and caught us off guard were Friday's unemployment numbers. And we were at 4.248%. So if we were at 4.25, it would have been 4.3, which would have been a breakout on the charts. But we've been at 4.24 times since we cut rates back in September. That caught us off guard. And what we saw was a big reversal in this market. And when you have reversals like that, you kind of take a pause and let's put it in perspective. We've gone up 33% from those post-Liberation Day lows. We've had a tremendous run. We've had headlines climbing this wall of worry, but we're now in the seasonal part of the market, August, September, where we can, digest some of these gains and, pause for a little bit. And I think we're in that pause, and who knows what headlines will dictate the narrative if we pull back a little further, but it's an interesting time right now.
What's your word of the day? Because it plays into that discussion.
Exactly.
Right now.
Digestion. I used it when I was just describing this market. What happens after you have a big run, a big meal? You have to pause. You have to digest. This market's been on a tremendous run. It's been the most hated rally of all time. It was something that took me by surprise how quickly we rallied back. But we broke out, we got to new highs. The 6,400 level in the S&P 500, this to me is now that new bar, and we may try to knock back on that ceiling, but I don't think we're going to get above that over the next 4 to 8 weeks. I think this digestion phase is normal, it's healthy, and then if we get a 5% correction, it takes us just below the 50-day moving average, and guess what? You get 3 on average a year. So this is a normal garden variety pullback in my eyes with some crazy headlines to back it up.
Corporate results are better than some had anticipated, especially with the threat of tariffs that had been brewing over the course of the past 6 to 9 months. You now have a deregulatory environment with the Trump administration. You have a lot of catalysts potentially for the upside. They have carried us arguably to those record highs. What needs to happen for that trajectory of record highs to keep happening going towards the end of the year?
Well, I think it is set up to do just that. I think M&A is just starting to heat up. The IPO market, you saw Figma, we saw Circle, that is really starting to pick up some steam. The retail investor is hungry for new ideas. So I can't wait to see the landscape. I've talked about financials on this show and watched the M&A and the regional banks. So to me, we are poised to have a great end of the year. But right now, given the run we've been on, given, the tariff, the tariff tantrums continue. India today, who knows what that's going to do. So I don't think we're going to get that momentum. The tell to me was Microsoft. Watch Microsoft's earnings. They crushed it. It reminds me of NVIDIA back in August of 2023. Best earnings ever. It gapped, opened higher, and then failed. That reversal, 555 and Microsoft being one of the leaders in this market, I think we have a new ceiling there, just like we do in the S&P 500, and we're going to go sideways for a little while. And sideways, as I say all the time, is a direction, and when you go through it, you don't want it. You want to see new highs. You want to see Palantir every day, not Microsoft going sideways for a little while.
Speaking of the Mag 7 names, you just reeled off a couple of them right now.
Yeah.
Your favorite pick is a Mag 7, but it's not Microsoft.
No, it's Amazon. I mean, you talk about a stock that crushed in all metrics. Yes, AWS, the cloud, did not do as well as, say, Microsoft and Google. They lagged, but they hit on every single metric. They beat across the board. Technically, the stock is pulled back. It is getting to a great risk-reward setup. For someone that's been on the sidelines, not in this name, this is a great opportunity. Between here and 200, I think you want to accumulate shares, because what is it going to do? It's going to start to rally as we go into the next quarter of earnings and into the end of the year.